from the US is by and large positive. So there's certainly room for the rally to last a bit longer, but we're still fairly cautious because the underlying problems of too much debt in the world have not been solved. And despite the strong fundamentals in Asia, I'm afraid investors in those markets are hostage to the fortunes elsewhere in the world.
Right, James, yesterday we had the Q3 GDP numbers come out for India at 6.1%. They were largely in line with estimates, but were the lowest levels that we've seen in the last 2 years. How much do you think that the Indian GDP would grow at in the worst case?
Well, the latest GDP numbers are fairly disappointing, 6.1% for the last quarter, against expectations of 6.3 or 6.4. Inflation has come down, but it's stubbornly high. I think essentially the central bank needs to ease more aggressively to stimulate growth. But unfortunately, inflation is stubbornly high, and I think it will remain so as a structural problem because, well, for one, the infrastructure in India is not as developed as it could be, which builds up inflationary pressures. So the central bank has a very difficult job to maintain growth on the trajectory they like without going back to the inflation we had not so long ago, which was in double digits, which is clearly not sustainable.
James, what are the risks to fund flows coming to emerging markets? Would oil prices delay rally we've seen in the market so far?
The oil price is certainly an issue for global growth. I mean, essentially, it's a higher oil prices are a tax on the consumer, and the consumer is very much still the driver of global growth. So problems in Iran that lead the oil price to spike up like it has year to date are definitely a concern, because the debt mountain that we face is all part of an equation. You've got the debt part, but you've got the GDP part, and if the GDP isn't growing strongly enough, then your debt situation doesn't improve, even if you write off debt as we're doing in Greece. So the oil price, potentially, if the situation in Iran simmers down, is likely to come down because we're not seeing the underlying demand. It's more of it's a risk premium that's factored in there. Iran being a large producer of oil, which can have an effect on GDP, which in turn hits sentiment and can hit risk assets such as equities.